Okay, let's unpack this headline that's been making the rounds. Gen Z's regret grows over generational housing divide.
Mm,
I'm guessing that sparks something for a lot of you listening because, well, the path to owning your own place feels less like a climb
yeah,
and maybe more like scaling a sheer cliff face for an entire generation.
it really does feel that way sometimes.
So in this deep dive, we're laser focused on Gen Z and the very real challenges of breaking into the housing market.
And what's immediately striking, I think, is just the sheer weight of information out there and all the different viewpoints swirling around this issue.
Right.
We've gathered some really telling pieces from like hard numbers that lay bare the rent burden many face
Hmm.
to practical advice on navigating the market, and maybe most powerfully, the honest, kind of unfiltered experiences shared by Gen Z themselves in a Reddit thread, all grappling with this exact problem.
Exactly. It's not just about dry statistics. We're tapping into the real anxieties, the frustrations of those, on the
Yeah.
front lines.
Yep.
Our mission today is to try and filter out the noise, pull out the most crucial insights from these sources,
Yeah.
and give you, our learner, a much clearer picture. Not just the obstacles, but maybe some tangible routes forward, too.
And keeping it jargon-free, focused on what you need to understand.
Let's do it.
Okay, let's start by setting the scene, because it is a tough landscape out there. BAM's research suggests that a staggering 75%, three-quarters of Gen Z renters in major cities are what we call rent-burdened.
Wow. 75%.
Yeah. To put that in perspective, that's 3 out of 4 young people in these big urban hubs just struggling to afford their rent each month.
Which leaves precious little for even thinking about saving for a down payment, right?
Exactly. Precious little. And, we need to consider this situation isn't just about high rents and isolation. It's also tied to things like, well, wage growth not keeping pace
Right.
with the rapid increase in housing costs. And, of course, the impact of investment on the rental market itself.
And that intense financial pressure. It's right at the heart of a really insightful conversation I saw on Reddit.
Ah, the Reddit thread. Yeah.
Yeah. One 18-year-old living in Sydney, and we all know Sydney is consistently one of the world's priciest cities.
For sure.
They posed this really fundamental question. How are Gen Z supposed to own a house in this cost of living crisis?
It's the question on everyone's lips, isn't it?
Pretty much. And their biggest hurdle, that formidable 20% deposit often required in such an expensive market.
20%. Yeah, that's a huge number. And this individual's concern, it really echoes the broader sentiment you find in that Reddit thread. There's a very real sense that, this generation is up against it in a way previous generations maybe weren't.
Totally.
One user highlighted the astonishing jump in median house prices in Brisbane. Apparently went from around, 150, 200K in the past to a current median of $800.
800,000.
Yeah. These aren't gradual increases. We're talking massive growth that just hasn't been matched by income levels.
It's hard not to feel a sense of, unfairness when you see numbers like that.
Right.
And what's particularly disheartening, as the original Reddit poster mentioned, is that feeling of their struggles being dismissed by older generations.
The back in my day talk.
Exactly. The accusations of being lazy or making excuses. It feels like it completely ignores the vastly different economic realities they're facing. It's like comparing two completely different playing fields.
That feeling of having your legitimate concerns just brushed aside, yeah, that can be incredibly isolating.
Definitely.
But okay, let's pivot now and maybe explore some of the strategies and shifts in perspective that our sources point to as potential ways forward.
Good idea.
The Gen Z Homeownership Top Affordable Strategies article, for instance, directly tackles this challenge.
And the Reddit thread, despite all the underlying frustrations, it also offered some genuinely practical advice. A recurring theme was this need to adjust expectations. The idea of the property ladder kept popping up.
Ah, yes, the latter.
The traditional approach, right? Start with something more affordable, maybe a smaller house or an apartment.
Get your foot on the first rung.
Exactly. And then potentially upgrade later as your financial situation improves. One user even described it as a hermit crab approach.
Ah, I like that.
Find a shell that fits now, rather than waiting for the perfect mansion.
Exactly right. And the Reddit discussion even gave some concrete examples, like within the Sydney context, suggesting one-bedroom units in the outer western suburbs might be around $400,000.
Okay.
While city options could be closer to $550,000. The key here, as they pointed out, is to get that initial foothold in the market, start building equity,
Right. Start somewhere.
and then see what future opportunities might arise. It's a long-term game.
Another interesting idea that came up on Reddit was rent vesting.
Rent vesting, yeah. Tell us about that.
So basically, buying a property in a more affordable location, maybe even interstate, and renting it out while you continue to rent where you currently live, it's a way to get into the property market without actually living in the property you own, at least initially.
That's a strategy that definitely requires careful planning, I'd imagine, and management.
For sure.
But it really underscores the kind of creative thinking that Gen Z is bringing to this challenge.
It does.
And maybe more broadly applicable advice from Reddit: steer clear of unnecessary debt. The user's list of hard drugs, gambling, flash car.
Uh-huh.
Ah,
That was memorable.
it certainly was. But it really highlights the importance of those fundamental saving habits, doesn't it?
Absolutely. And building on that saving point, the NASB blog mentioned the potential of using gig economy opportunities and side hustles.
Right, the side hustle economy.
Yeah, to really accelerate those down payment savings. Every extra bit can contribute significantly.
Every little bit helps.
They also touched on the possibility of getting financial help from family or friends. The bank of mom and dad.
Ah, yes, the bank of mom and dad.
While, relying on that isn't an option for everyone, as many Reddit users were quick to point out,
True.
it is a reality for some. And it can certainly make a significant difference in the timeline to homeownership.
No doubt.
Now, let's maybe shift our focus a bit to the crucial role that location plays and the impact of remote work on housing demand.
Yeah, this is interesting. The Reddit thread had some strong opinions on this. One user stated quite directly, leave Sydney.
Wow, just leave.
Yeah. Sydney won't be having anywhere near enough houses built for prices to come down, which reflects this growing awareness that maybe staying put in these super expensive major cities just isn't viable for many aspiring buyers.
And this is where that Future of Remote Work article from Rentastic offers some valuable broader context.
Okay.
It points out how the increasing prevalence of remote work is indeed causing a shift in housing demand, moving away from the traditional urban centers
Right.
towards suburban and regional areas that can offer, a better balance between cost and quality of life. And here's where things get really interesting. Rentastic even predicts that cities in the southern and northeastern U.S. will see significant increases in housing prices because of this shift.
Interesting. So it's pushing prices up elsewhere.
Seems like it. And while our Reddit discussion was focused on Australia, this larger trend suggests a kind of global reevaluation of where people are choosing to live based on work flexibility and affordability.
And this ties directly into the Reddit advice about considering regional communities within Australia, too. One user specifically mentioned Townsville, saying housing prices there are like half of what you'd find in Sydney.
Half. That's a huge difference.
It really highlights the dramatic cost differences that exist even within the same country. Being open to relocating becomes a significant factor in the whole homeownership equation.
So it's not just about how much you can save, it's also about being strategic about where you're looking to buy.
Exactly.
Okay, now let's delve into some of the specific financial tools and programs that might offer some assistance.
Right. The NASB blog really emphasizes the fundamental importance of establishing a solid financial foundation, consistent saving, building and maintaining a good credit score, that kind of thing.
The basics, but crucial.
Absolutely crucial. They really position understanding personal finance as a critical skill for navigating the complexities of the home buying process.
And thankfully, there are specific programs designed to help first-time homebuyers.
Yes.
Yeah.
The NASB blog highlights options like FHA and VA loans in the U.S., plus various state-specific programs.
And the key benefit there is?
Well, potentially lower interest rates, and importantly, reducing the size of the required down payment. FHA loans, for example, are often attractive because they have lower down payment requirements compared to conventional mortgages.
Got it. So it makes it a bit more accessible.
Potentially, yes. And the Reddit thread echoed this advice too, suggesting reaching out to a mortgage broker early in the process.
Smart move.
Yeah, really smart. To understand what options and government incentives might be available specifically to you, a knowledgeable broker can be an invaluable guide.
The concept of lender's mortgage insurance, or LMI, was also briefly mentioned on Reddit.
LMI, right. What's the deal with that?
It's basically insurance that protects the lender if you default on your loan. The upshot is it can allow you to buy a property with a smaller deposit than the standard 20%.
Ah, okay.
But the downside is you have to pay a premium for it, which adds to the overall cost.
So a trade-off there.
Definitely a trade-off.
Now, moving beyond just the financial mechanics, it's important to consider the the unique perspectives and values that Gen Z brings to the table.
Yeah, that's a good point. The NASB blog touches on this, noting their interest in things like sustainability
Hmm.
and a willingness to explore alternative living arrangements.
What kind of alternatives?
Well, things like co-buying, where multiple people pool their resources to purchase a property together,
Okay, yeah.
rent-to-own arrangements, and even the growing appeal of tiny homes. These choices reflect a generation that might be more open to challenging traditional ideas of what homeownership even looks like. That makes sense. And also their tech savviness, right?
Oh, absolutely. As noted by both NASB and Rentastic in their discussion of digital platforms, Gen Z's inherent tech savviness gives them a real advantage.
How so?
In researching properties, comparing loans, navigating the often complex online real estate market, they're digital natives in this evolving landscape.
Totally. They're navigating this with a level of digital fluency that, previous generations just didn't have.
For sure.
However,
Yeah.
it's crucial to balance that optimism with some realistic expectations about the challenges ahead.
Definitely need that dose of reality, and the Reddit threads certainly provided some of that.
Yeah.
One user referenced a report suggesting that in Sydney, it could take an average of 41 years
41
just to
years.
save for a house deposit. That's a pretty sobering statistic to consider.
That's more than sobering. That's kind of terrifying.
Yeah. It is, and there were definitely some quite pessimistic viewpoints expressed on Reddit. Some users feeling pretty strongly that traditional homeownership is simply out of reach for many in their generation without significant financial help from family
Right. The bank of mom and dad again.
or a very, very high income.
So, in light of these very real challenges, the Reddit advice to be flexible with your plans seems particularly important.
Very important. Your first home doesn't have to be your forever dream home. Starting smaller, being adaptable to different locations, different property types, that seems to be a key takeaway.
Hmm.
And interestingly, one Reddit user even suggested that in the current environment, your income, or what lenders call mortgage serviceability,
Right. Can you actually pay the mortgage each month?
exactly, your ability to consistently make those mortgage payments based on your income and other debts, that might actually be more critical right now than having a massive deposit saved up.
Huh. That's an interesting perspective.
Lenders need to be confident you can keep up with the repayments, especially with potentially higher interest rates.
Makes sense.
Yeah.
So what does all this really boil down to? We've covered a lot of ground, from the significant financial hurdles to the various strategies being explored, the shifts in perspective.
Yeah, a lot to take in.
And that leads us to our final thought for you, the listener, to maybe consider. Given these considerable challenges and all these diverse strategies that Gen Z is considering or being forced to consider, how might this increasing difficulty of achieving traditional homeownership actually reshape societal norms?
Mm-hmm.
Our expectations around housing, around financial milestones. How might that change in the years to come? It's a significant question, and our deep dive today really just scratches the surface, I think.
I agree. But to bow it all together, the key takeaways seem pretty clear. Gen Z is facing significant financial obstacles on the path to homeownership,
Especially in big cities.
especially in major urban centers where the cost of renting is just incredibly high. So being adaptable in your expectations, considering smaller properties or looking in more affordable regional areas, and actively exploring available government support programs. Those are all crucial steps.
And remote work plays a part.
It does offer a potential avenue,
Yeah.
by opening up more affordable locations. But ultimately, building that strong personal financial foundation, consistent saving, good credit score, that remains absolutely essential.
Couldn't agree more. And for you, our learner, simply gaining this knowledge, understanding the range of options available, that's the very first and arguably the most empowering step in navigating this really complex landscape.
Absolutely. Knowledge is power here.
So we really encourage you to delve deeper into the specific resources we've mentioned. Research the different types of loans, investigate first-time buyer programs in your specific area, explore information on regional housing markets. Find what might align with your individual circumstances and goals.
Because the housing market is constantly in flux, isn't it? And its impact on future generations will continue to evolve. Staying informed, remaining adaptable, and being proactive in exploring all the available options. That's going to be key for Gen Z as they forge their own paths toward hopefully secure and fulfilling housing situations